Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews, and I'm here at ASB with Steve Jurkovich, who is the Executive General Manager for Corporate, Commercial and Rural Banking. Thanks for making some time for us, Steve.
Great to chat.
Look, we've noticed in ASB's results in the last 2 to 3 years that the lending growth on the commercial and rural side has been really strong. And in your last annual results that came out recently, 8% for business and rural lending growth, which was more than double the figures for the same period from the Reserve Bank sector credit data. How are you managing to grow at such a high rate?
A couple of things I'd say. Firstly, we're a bit smaller than some of the others, so on a dollar for dollar basis, that will drive our percentage growth. So there's a sort of a little bit of a maths thing that's on our side there. Against the system, we've been investing in the corporate, commercial and rural area because we felt that given our share versus, say, our home loan share, Gareth, we were light. And that when you look across the New Zealand business environment, the really big growth opportunities are probably in that mid-sized corporate and mid-sized commercial business. So that's sort of signalled to us an opportunity. I mean, we've hired about another 110 extra people over that time.
Over 2 to 3 years.
Yeah, that's right. So we've seen it as an opportunity when we sort of thought that other competitors were retrenching a little bit from the marketplace. It was an opportunity for us to get out there and grow. I think the other thing we sort of steered into is we feel like we've got a good, strong brand presence, but that brand is, usually associated with 175 years with a heritage of predominantly a retail bank, predominantly Auckland focused. And so that actually doesn't tell the story of our brand. So we thought if we could get out there and talk about it and get on the front foot and show that we're excited and that we want to grow with customers, that would work well for us, and it has. When I think about the growth, lots come in property, which has been great for us, probably off the back of good decisions made during the global financial crisis. So quite a clean balance sheet, allowing us to support larger end customers to grow. Rural, supporting customers with quite big ambitions around dairy conversion in particular. And so we've seen customers move across New Zealand and look for opportunities. So again, I'd say probably 8 out of $10 of growth have gone to supporting existing customers, but doing new things. Commercial, we're strong in Auckland, and Auckland has been strong. So I think you'd probably say solid performance, but a bit of a rising tide element to that as well, which is positive. And so for us, look, we're really lucky in terms of team engagement. We seem to have people that really like working here. That enthusiasm shows through to customers, and supporting existing customers has worked well for us.
And in terms of the rural, firstly, and the commercial, secondly, what sort of areas are you growing in? In your rural area, it's mostly dairy. You've mentioned dairy conversion. So
yeah,
that's a big chunk of it.
Yeah,
commercial, is it mostly property? Can you just give
sure.
more flavour around that?
Around rural, yes. That's really as a result of the type of investment that's required for dairy. So on a like-for-like basis, we're still supporting cropping, we're still supporting sheep and beef, but their needs are smaller compared to dairy. So I'd say the whole market has been driven off that investment, which I think, when you look at the numbers, has proved to be very lucrative for the people that have invested in that area. But certainly that's a large chunk, as I said, supporting existing customers to grow their business. In the property space, our growth was about 50-50 between property and commercial. In the first couple of years of the period you're talking about, or maybe sort of year and a half, property was a big chunk of it. But in the last 12 months, no, it was about 50-50 with commercial. Again, Auckland, very strong. As I think if you look at all the business confidence measures, people were pretty upbeat about investing. I think also, from your commentary and me from reading your commentary, is that a lot of people held back from some of that capital investment for quite a while to get confident around what the right investment was. So I think there's also a bit of a bow wave of investment around some kit and assets that they needed to invest in. So I think we've done well there. In the property space, we've been very focused on investment property. And in Christchurch, that's worked well for us. We're able to come in with a pretty clean balance sheet, not too impacted by existing customers with insurance situations, so ready to go and ready to get going pretty quickly on the restart. Also, we've done pretty well because some Christchurch money has come to Auckland, and obviously our presence in Auckland and in our property business there, we're pretty strong, so we have benefited from that capital movement around New Zealand. And there's been a few large transactions that are pretty much public knowledge where those have been considerable sums invested. So that's worked well for us.
And on the commercial side, other than property, are there any other key industries where you've really grown strongly?
Yeah, I think we've greatly expanded our trade reach. So, New Zealand is an island. Most things are coming from somewhere or going somewhere. So we have grown out our footprint around the trade business, but also leveraging the Commonwealth Bank into Indonesia, into China and other places. So that's been a good growth opportunity. But across the board, commercial actually has been pretty strong. We've seen good support for technology-based companies. Vista and others that have listed have obviously expanded. So good sort of reach into the technology base, but also just heartland businesses have done pretty well.
And you mentioned that most of the growth has been from existing customers. So to what extent have you actually been winning customers off your competitors?
If you look at the net registrations in rural, we've won more customers than we've lost against all of our competitors. So we're certainly net growing. And not every bank can say that. So I'd say, yeah, we have been supported by our new-to-bank customers joining us, which has been fantastic. And I think, that's one of the great sort of measures of the marketplace is how are you able to attract new customers. So rural's done that very well. Commercial's done that strongly. But quite often with new customers joining us, the volume that they won't want to borrow to start with is not that high. They may be just getting started or growing, or there's been a change in their business where they're looking to expand and they want a new banking partner. So, look, I'd say, dollars are skewed towards the existing customers. Of course, they're rolling up some businesses and doing something different as well. So it's a bit of a mixture.
And on the rural side, what percentage of your growth has been coming from dairy? And you mentioned that the conversions, but also customers moving to other parts of the country, expanding as well.
Yep.
How much of that sort of business have you been doing?
Oh, look, I think probably 75% of the asset growth would be around someone wanting to expand, whether it be support blocks, whether it be an opportunity in their local area that sort of makes sense for their farming unit. Our more active rural corporate customers are certainly always looking at opportunities and looking to sort of centralise or decentralise their risks around how they operate as a farm unit. So that's certainly been one element of it. I think the other element has been equity-style partnerships where they've thought, right, well, I've got some expertise and some horsepower I can bring to this, married up with some capital from both onshore and offshore, and there's an opportunity to get after. So we've seen an amazing value transformation, particularly around Ashburton and those sorts of areas where land has really, really transformed its productivity. And that really comes from sort of the skill of the operator, their technology inputs and, their expertise. So that's kind of driven the growth.
And obviously ASB's heritage is as the Auckland Savings Bank, so you've got the strength in Auckland and the northern part of the country. But what sort of growth, you mentioned Ashburton there, what sort of growth have you been seeing in other parts of the country? And is there any perception out there still that you're an Auckland bank?
Maybe I'll answer the last bit first. So yes, I think so. Far less than there was, when I sort of started in the bank in the late 90s, but there are still people that see the A as very much an Auckland thing. Even outside of our heartland retail business, there's still some people who are sometimes a little bit surprised around the customer franchise we have in the corporate and the commercial and the rural space. So, making sure that people understand that we've got a very competitive offer, that we've got the skills, the balance sheet, the expertise, and most people know that we're pretty well known for our technology to make sure that we can deliver in that space. But look, I think we've got more work to do there, to be frank. If I think about the expansion, the top commercial region was Christchurch for us, which I guess is a sort of a double-edged thing in some ways. So some people would say, well, it should be because, it's an area where really, really material investment is happening. But I think anyone that goes to Christchurch regularly realises that there's incredible challenges as well. But we're really, really proud of the performance. It was absolutely line ball in terms of the units, which was Christchurch property and some of the Auckland ones. So I think for us that's a great signal that across the country we're seeing good opportunities.
And how have your competitors been reacting to your growth over the last 2 to 3 years? I mean, obviously you've said from a smaller base than some of them, but they obviously must be noticing you out there.
Look, I think we all watch each other's results pretty closely and quite often through your updates, I guess. I think there has been challenges for some of the other organisations. They've had pretty large transitions, so if you look at some of the big players there, so they've had a lot to concentrate on. Look, but I think they are very strong competitors. We're very, very well served in New Zealand. We have great, well-capitalised banks. I think we've got good people who are trying to do the right thing. Touch wood, we've been pretty much free of some of the nasty stuff that's happened overseas. So I think, we respect the way that they are competing. For us, it's about, we want to be more enthusiastic, more excited, be on the front foot talking to customers, and we think from there that's a really great place to compete.
And just in terms of your lending criteria, have you changed anything, loosened anything around that in the last 2 to 3 years to help grow?
No, I think actually the counter, we've been very stable about our risk appetite, but I think, you have to accept that during those tough times in the GFC and coming out of it, people's numbers were weaker. And so that meant that there was less opportunity. Some of their interest covers and those sorts of things, servicing capabilities were lower. So if you think about the lift in their performance, that's actually meant that we can do more with them. But no, we've been very, very stable on our settings. And, we're committed to making sure that customers understand that where our appetite stands, how we'll support them, and, that, hey, there's cycles in business and we need to protect them through the ups and the downs of that.
And in terms of the quality of lending you're doing, the other thing, sometimes people will say, heck, if you're growing well above market, are you comfortable that it's good quality lending that you're doing?
Yes, I am. We've got a very active board who ask that very same question, as they should. So we're really, really comfortable. And as you can see from the GDSs and things, our impairments are low. And I mean, it's a strong part of the cycle, so you would expect that. And when I look across the other competitors, their numbers are similar. So no, I think we're in a good space there. Quite often we find when, unfortunately now and again when customers refinance from us as well, is quite often it's about a relationship. And a relationship might have been tested during tough times. And for everyone's sake, sometimes you need to make a clean break. So we certainly accept that. All banks will see things a little bit differently. So, maybe we're more upbeat about a particular opportunity or the particular expertise of a customer than one of our competitors. So that will always play a part. But no sort of worries on that front at the moment.
And we hear a lot these days about banks using data, the talk of big data, especially to help sell more products to retail customers. But what about on the commercial and rural side? I mean, are you looking to use more data from customers there as well?
Yeah, we are. I think globally there's the phenomenon around, what data are you collecting, how can it be utilised and how can it be commercialised. So I think that's, the one element of it that I'd certainly agree with. Secondly, if you think about our relationship with partners like Xero and others, that's all about the ease of movement of data. And so we think that, in that accounting platform space, it's really, really important that we are enabling the movement of data. I think the one around that you touch on around utilising data, at the heart of ASB is around trying to meet customer needs. And so from our perspective, if the data surfaces an opportunity to talk to a customer about a need, then that's something that we should really focus on. But from our perspective, it's very much around what does it surface, what is this opportunity, can we get the opportunity to get in front of the customer and say, look, hey, we've been thinking about your business, we wonder if there's not an opportunity for you to think about this. But very much surfacing the opportunity and then making sure the opportunity that we raise is all about the customer need. So unlike some sort of situations where I guess, the global benchmark might be in Amazon and others where they're sort of surfacing opportunities all the time, I don't see that in a relationship-based business. I sort of see bankers and customers having a shared understanding around here's an opportunity, here's what a need might look like, what do you think? The world's changing so fast there that maybe that will change, but at the moment we're very, very focused on making sure that the customer leads that opportunity, not us.
And we hear a lot about, in the dairy side of things, the impact on the environment. There's often debates going on about water quality issues, that type of thing. You launched your rural environmental compliance loan a year or two back. Yep. How's that all going? And how are your farmer customers sort of reacting to all this debate around about water quality and the impact of more intensive dairying?
Tough question, in the sense that there is just so much to cover in that space, isn't there? So if I start with the environmental compliance loan, look, the loans are in the hundreds of customers that have taken up that opportunity, and I think that's great. And sometimes that's the catalyst that was needed to undertake some work that they wanted to do. Look, across the hundreds of conversations that we have every month with our customers, I never have any personally or hear about anywhere farming customers aren't aware that good stewardship of the land is absolutely critical to the future. We sort of recognise that there's this massive opportunity coming from an expanding middle class around the world, but it does put pressure on, sustainability. And when we mean sustainability, we mean both environmental and business performance. So for us, I think literally someone in a group of people need to get off the fence and actually say, hey, let's get this conversation going. Let's get some investment in the area because, head in the sand stuff's not going to work. I think my gut feeling would be, while hundreds of customers have taken up the opportunity to use the loan to get some work underway, many didn't need that facility, but the fact that the conversation was happening was a really important thing. If you look at elections and the way politics works in New Zealand, there's, the urban population obviously greatly outnumbers the rural one, and so having an informed conversation around what is happening on farm is absolutely critical to the sustainability of the industry. So getting on the front foot and trying to make that conversation work, the investment we've done with Agri One, with Lincoln and Massey, as well as another sort of initiative there. So we think we're a big business. We need to contribute and actively put our, balance sheet where our mouth is and make sure we get on the front foot. So, we've been lucky enough to pick up a couple of awards and those sorts of things, which is always pleasing for the team that are involved. But I'd say the key success factor for me is hopefully, hundreds more ASB customers are thinking about what sort of investment they should make around a more sustainable business.
And look, just finally, looking ahead, how long do you think you can keep growing rural and commercial lending sort of well above market? What's your outlook for the next year or two?
So I feel really upbeat around the fact that, versus the system, we can outperform the system. We see no shortage of opportunities. We see a business environment where, as you've seen recently, people are ambitious. That's one of our values. We think if we can back the right customers who are ambitious about what they want to achieve, then there's plenty of growth to come. Look, there'll be ups and downs, but my belief is that the best customers will always outperform the economic cycle. So I think if we can pick up the right customers, keep the right bankers, and, we've been very, very fortunate that people seem to love working for ASB, so they give good continuity of relationship. That drives a lot of performance, I think. And then we just need to, make sure we make prudent long-term decisions. I think we're good for quite a few more years.
Well, thanks for that, Steve. That's Steve Jurkovich, who's the Executive General Manager for Corporate, Commercial and Rural Banking at ASB. And I'm Gareth Vaughan at interest.co.nz.